Hi everybody, thanks for joining me. My name is Dan Casey. Today I want to talk about corporate bonds and how to figure out exactly how much money will kick off in your portfolio. I also want to look a little bit into preferred shares and the same thing there. This kind of goes hand in hand with the video I made, how much do I need to retire? Because if you're able to put most of your money in corporate bonds or preferred shares and it kicks off enough income that you can live off, well, you're good, right? There's really not a whole lot more you should do. You should mess around with the market, stock market, if you don't want to. If that money is in corporate bonds and preferred shares and it's kicking off what you need to retire, okay? All right, so first thing, let's go into finance.yahoo.com, okay? First thing we want to do, type in the ticker symbol LQD. Okay, that is a basket of corporate bonds. There's no money manager in there like a mutual fund that are buying and selling bonds to try to get the best yield. This is a basket of high-grade corporate bonds, so very, very low fees. And it gives you an idea of what income you can get from being in corporate bonds. These are the big names that we've all heard of that are in these particular funds. All right, so here it is, LQD. Here is the share price. We're going to need to know that, $120.96. Something to note here is the yield. You can just multiply how much you plan on investing, like $50,000 times this 3.29% or 0.0329, and find out on an annual basis roughly how much money you would make from that money into this fund. Now, it's not detailed enough for me, so I'm going to go that next step because as you can see right here, that yield is as of January 31st. And right now, as I film this, it's in March. Not good enough for me. So let's go into the year chart. And as you can see, these Ds down here, if you hover over these Ds, these are the dividends that are paid from this fund. And as you can see in this fund, it's on a monthly basis, which is how most bond funds operate. And it's how most of my clients like it, and me as a money manager prefer it. It's a consistent basis on a monthly, so it's easier to plan. Okay, and as you can see, the chart, this is kind of what the bond fund has done as far as capital appreciation or depreciation over this last year. All right, so let's focus on the dividends though. That's what we're concerned with right now. If you hover over this D, you can see it's 33.5 cents per share that it's paying out. Now we want to get this dividend amount per share so we can figure out how much it's going to pay us. And it may or may not change over a month or every month. So let's look at it. See, it went down to 32.2 cents a share. Back up 33.5. So for the most part, it looks like it's going to be 33.5. In December, usually, there's sometimes some one-time dividend kickoffs. We're not going to calculate that. It's not accurate. I mean, it throws off the dividends really. Just consider that gravy if they do that ever. But let's just kind of get the average, and you can see it looks like it's about 33.5 cents per share. Okay, so let's figure out how much that would kick off. If we invested $50,000 into this particular fund, let's divide it by the share price, which is, as of right now, $120.93. This is going to tell us how many shares that we're going to have. So let's take 50,000, whoops, 50,000 divided by $120.93. We are going to have 413 shares, okay? So that's the figure that we use to multiply by this dividend because this is per share. So if we multiply that by 33.5 cents, we're going to get $138.50, roughly 51 cents if we really want to get crazy. That's on a per monthly basis, okay? And that's going to be pretty darn accurate. Every month you're going to get a check for $138.51. But as you can see, as we go back, it just changed a little bit, but that's pretty accurate, okay? So regardless of what the fund actually does, as far as your principal amount that you put in, your 50,000 will fluctuate a little bit, as you can see. It kind of does trade in this range for the most part. And just kind of, if you look at it like a farmer who's growing corn, they care about the yield, right? They care about the yield of the corn, not necessarily the value of the land. And that's kind of what this is right here. The amount that you put into this fund is the value of the land. You care about this money that it's kicking off, because no matter what it does, no matter how it fluctuates, it's still going to kick off the same amount because your share amount doesn't change. All right, and this is based on shares. Let's go into, well, actually, let me show you just the fluctuation of a corporate bond fund. If we go back 2 years, you can see, well, this is probably not exactly typical. We are in a quote unquote bubble. I'm not quite sure if we are, but the pundits seem to think that we may be. So don't expect this kind of capital appreciation. This is what your $50,000 would grow to, irregardless of the dividends that it's kicking off, okay? 2 years, 5 years, 10 years. Okay, so you can kind of see that, of course, in 2008, it did very poorly, like just about everything. So if you don't think we're going to get another 2008, it's probably more going to act like in this range right here, okay? All right, so let's look at preferred shares. Okay, type in the ticker symbol PFF. Preferred shares are usually issued by banks. Other companies do offer preferred shares. They come in the ranking higher than common stocks, meaning if something happens to the companies, they have to pay the dividends to the preferred shareholders before common stockholders. But really, don't even get into that mess right now, because preferred shares, this basket of ETFs, you own so many, and they're all big blue chip usually, that I wouldn't worry too much about that. So you can see the yield, 6.24%, a lot juicier than bonds, but they're going to be a little bit more volatile. Like I said, in between bonds and stocks, kind of on that volatility range. The good thing is mostly retirees own preferred shares, so they're not like owned by a demographic or a group of investors that buy and sell and are looking for big gains, because you're not going to get big gains out of preferred shares. We're looking for dividends. All right, so let's go into this 1 year chart. And as you can see, this is kind of what you should expect from preferred shares, this kind of range. See, this goes from $40 to $39 a share, okay? Of course, in 2008, you did see a nice size dip, a correction down to $19.11 per share, okay? But this really is the range you're looking at. If you think we're going to be in another 2008, then buyer beware. But if not, this is kind of the range you're looking at, okay? So let's look at a 1 year so we can get a nice idea of what the dividend is going to be. 0.188, 0.378. Now again, this is at the end of December, so it's probably a one-time, spin-off, kickback, whatever. Ignore those. For the most part, take the other ones and kind of average them out. And you might be thinking, after we did the corporate bond one, wow, this is a lot less. But because it's only $39.95 a share as compared to the $120 a share of the corporate bonds, we're able to get much more shares if we buy into this fund, right? So dividends are based on shares. So if you have more shares, you're going to make more money. All right, so let's look at the preferred shares and see how this works out. Okay, so let's pretty much look at one. Yeah, let's just look at this last one. That seems to be a good average, 0.188. So if we invested 50,000 in this fund, let's divide it by the share price, which right now is $39.98. Get back into my calculator here. $50,000 divided by $39.98 equals, you would own $12.50. 1,250 shares of this particular fund. All right, so let's multiply that by the dividend, which is 18.8 cents. And this fund will kick off $235.12 roughly a month. Okay, this one pays out a month, every month, $235. Now that 50,000 will fluctuate, as I just showed you, but that dividend is pretty much going to stay the same because it's based on how many shares you own, and the shares don't change. All right, so that's preferred shares. And that you can see if we go back to the main area, The yield 6.24, the other one's 3. Like I said, about 2 to 3 percentage points more than corporate bonds. So if you can deal with that fluctuation, that's also a good way to boost your income. And if that's what you need to fill in that gap while you're retired, then you're good. All right, so make sure you subscribe to my channel, as I will issue many, many more of these kinds of videos. And like it, add comments, whatever you want. I'm going to try to answer them all if people post those below this video. Thanks for checking it out.